dear business owner. Welcome to today's training. Today's topic is the right way to start and grow your business. This training is brought to you courtesy of SBACCOUNTING, a firm of accountants for small business owners. Today's training will be facilitated by His Ebuji, the lead trainer at SBACCOUNTING. So let's dig and dive right straight into it. So at the end of today's training, you will have been able to understand how you start your business and how profit and cash flow are important as you start your business, and how these two things, profit and cash flow, help you to transcend your startup status into your growth stage. And at the end of the training, we shall wrap up with an introduction to growth using the growth map. And so let's get started. The business journey. You started your business, yes. And as you started, whether you sell goods or you render services, there is always money coming in and money going out. And so, as you start, a good foundation for starting is being able to monitor and master your profit and cash. Being able to monitor and master your profit and cash. Profit is simply your expenses is less than your revenue. So what comes in, what the clients pay you, by the time you take out your expenses, you have something remaining. That is profit. Profit is revenue minus expenses is equal to your profit. Then you have cash flow. Cash flow simply means having cash to constantly oil and run the business. Having cash to constantly run the business. A good foundation to start is being able to monitor profit and cash flow. When you have started well with being able to monitor your profit and cash flow, then when you begin to realize, you begin to see a need for growth, the process will be easier and smoother, and then you can begin to gradually, based on the good foundation you have built, you can begin to transcend towards growth. So let's move to the other slide. This slide says the summary of all I've just talked about. Start and start well as a business owner. And how do you start well? You start well by creating a system of recording and reporting monies that come into the business and flow out of the business. The system you create helps you to know when you're making profit, huge profit, little profit, and also when you're making a loss. A simple system that have you tracking what comes in through using an invoice to record, using an invoice to record inquiries that your clients have made and sending these invoices to them. And as you send to them, you're recording in your book. When they pay, you issue a receipt and also record that they have paid. That is the system of recording. Recording what is coming. When you make expenses, you're recording. I have spent this amount today. I have spent 100 naira today. I have spent 1,000 naira today. I spent 5 naira yesterday. That is the system. That is how you start well. And through that, your record keeping, you are able to know, oh, have I made a profit at the end of the week? Have I made a loss at the end of the month? That is now the system of reporting. You started recording using an invoice. You started recording your expenses. You started recording using a spreadsheet. You started recording using a notebook. Then you report at the end of the week, at the end of the month. Oh, based on my revenue and my expenses, I've taken my expenses to my revenue. I made a profit. Oh no, I made a loss. What happened? Let me investigate. Maybe I'm not selling at the right price. So that is the system of reporting. So I want to ask you, as a business owner, every time you're dealing with a client, do you issue an invoice? Maybe a client or a potential client has made an inquiry. I want to buy this handbag. I want to buy this pair of shoes. Oh, I need your services. I need you to design a logo for me. I need you to design my website. I need you to make a dress for me. Do you send an invoice to the client? Do you record that invoice in your own books, notebook, or in your Excel sheet, or in your software, your bookkeeping software? When the client pays, do you issue a receipt, and do you keep a record of this for every sale? That is the question for you. If you have not been doing that, then you have not started the right way. You can go back now and start the right way by issuing an invoice for every client you're dealing with. Issue an invoice to them. My second question to you, dear business owner, is this: do you do bookkeeping regularly? Do you do bookkeeping every week? Or if you're not able to do it every week, do you do your bookkeeping at least once in a month to see if you're making a profit or if you're making a loss? Do you do this frequently? How frequently do you do it? Last month, do you know if you made a profit or if you made a loss? And if you made a profit, was it a huge profit or a very lean profit? That is my question to you. If you have not been issuing invoices or receipts to your clients and customers, if you have not been doing your bookkeeping regularly, you have not started on the right route. You can begin to start now. From this moment now, say the next customer, the next client who contacts me, I'm going to issue an invoice to them and I'm going to record it in my system. And from this week, I'm going to start doing my bookkeeping such that I know at the end of every week if I'm making a profit or if I'm making a loss. Let's move on. So that is the first foundation, how you start, by being able to record and to report what is going on in your business. The second stage of reporting, of recording and monitoring and reporting, is the budget stage. It's called the budget stage. Now I've talked about profit, I've talked about the client contacting me. Now I want to look at cash flow. I told you for you to start well, you must have a good grasp, a good understanding of how to manage your profit and your cash flow. I have briefly talked about profit and about how you record and you are able to monitor and report on your profit. Now I'm moving into cash flow. For you to be able to record and monitor cash flow, you need a budget. So the tools you need: invoicing, a software, a bookkeeping software, or a spreadsheet, and a budget. Those are the tools you need to start well. If you want to be able to manage your finances, you want to be able to manage the monies that come in, the monies you spend, you want to be able to track and record what is going on in your business, you need to be invoicing, you need to be doing your bookkeeping, and you need a budget. What is a budget? A budget simply means a template that tells your money where to go. So you are not wondering, where did all the money I made last year, where did they all go to? All the money I made in business, where did they go to? So a budget helps to tell where your money should go, so you are not wondering where your money has gone to. And so the example we have here is XYZ business budget. An XYZ business budget is showing the income and the expenses that XYZ hopes to make in the new month. XYZ is using a budget. Why? Because he wants to be able to manage his cash flow. And how do you have a good grasp of your cash flow in business? It is by prioritizing your expenses using the budget. You manage your cash flow. You manage your cash, the money you currently have in your business. You manage it properly by prioritizing your expenses using a budget. You manage the cash you have in business by prioritizing your expenses using a budget. So this is XYZ's budget. XYZ is into making and producing coconut oil. And so that's why you have other expenses. You have products, bottles, and oil of 50,000 naira. So that is the first expense that XYZ is going to incur in the new month. Every other expense will come under that. So XYZ is not going to be paying for advert, or is not going to be paying for maybe doing giveaways. The first expense that XYZ is going to spend its money on is its products for bottles and oil in the new month. So it's not going to be looking at, it's going to prioritize it. So my bottles and oil come first. Then maybe after that, if I have a loan to pay, that comes next, so that my creditors are not wondering what's going on. Then I can start thinking of any other little expenses, maybe for marketing. Maybe I need to do some collaboration, some giveaway products. That those will come under that. And it is the budget that helps XYZ to be able to plan. So it's a planning tool for him to be able to manage his cash. Without this tool, XYZ is left open. He can decide, okay, let me do marketing first. Let me go and do advertising of 50,000 naira. And at the end of the day, he would have wasted the cash resources he has. He would not have been able to prioritize them, but the budget has helped him to be able to prioritize them. And that is what a budget does for you in your business. So you start well by using an invoicing your clients and issuing receipts when they pay. You do your bookkeeping monthly and regularly. Then you use your budget as a tool to prioritize your expenses on one end, and then to monitor what has happened. So you use it to prioritize first. Prioritize how your expenses will go within the month so that you do not run out of cash. You have 100,000 naira cash to plan with for the new month. You prioritize your expenses. Bottles and oil comes first. Next, my employee salary. Next, okay, marketing. You ensure that your expenses are within that amount you have planned, that is in the bank. Not the money you're planning to make in the new month. No, the money you have in the bank is what you're planning. That's why you prioritize your expenses. Then at the end of the month, when you have sold, you have spent money, you have made sales, you come in, you have the column where you call actual. You begin to fill in the amount of money that you have made, the amount of expenses that you have incurred in that month at the end, and then you now compare your estimated with your actual. Then it becomes a monitoring tool to see if you spent more than you budgeted, more than you estimated that you would spend, or if you spend less than you estimated you would spend. It's also a tool for you to set your target. Hey, income, I want to make an income of 100,000. At the end of the month, did you make the 100,000 naira? You put in the actual day of what you made, and you compare. You're able to see if you met the target you set, or if you fell below the target. That's how a budget helps you to start on the right note. It helps you to start your business on the right note. When you have started by keeping records using your invoices, checking what's going on in your business using doing your bookkeeping, and also using your budget as a tool to prioritize your expenses and to monitor what is happening in the business, then you are already making yourself ready. You're already making your business ready for the next growth stage. If these are not in place, if you begin to tell yourself, oh, I think my business should be growing, I've been in this business for 2-3 years, and you jump into growth, you would hurt yourself, you would hurt your business, because then you are not taking that decision, that growth decision, based on where you're coming from, based on facts and figures. You're taking it on make-believe, and so your growth is make-believe. You are not growing. Instead of growing, you'll be putting yourself into much troubles, because you may be spending more, you may be doing more than you should have been doing if you had these things in place that would have aided a smooth transition to the next level of growth. So we've talked on how to start. Now let's go into the growth process. Let's move forward. Let's move into that growth stage. Believing, for example, that you've started well with invoicing, doing bookkeeping, and using a budget. Let's now move into the growth stage. Let's talk about growth. Let's talk about growth. You grow beyond your startup phase by using a good map. Simple and straightforward. If you have done your homework, if you have started, if you have built on the right foundation, invoicing, bookkeeping, using a budget, then when you're ready for growth, when everything around you begins to say it's time to grow, the demand for your products are increasing, your location you are is becoming too small, or you need to get new equipment, you need to get new things, then you're ready for growth. And what you need when you have come to that stage for growth is a growth map. So common questions that would tell you that indeed you're ready for growth are these. One of them is, hey, you have started seeing the need to move from your current location to a bigger location. Is this place too small for doing business? Is this place not able to, for example, you own a salon, and now customers come and they have to wait for a long period of time, and then you begin to say, this place is becoming too small. You need a bigger place and be able to take more customers. Or is your goal to expand the product line? You make hair care products, for example, and you have been doing every month about 100 bottles. But now, before the middle of the month, you've sold out on that 100. And so you know it's time to expand. You need to be doing more. Maybe you should begin to do like 300 every month. Or you have been using a particular machine for a while, and now you've seen that based on your production capacity, you need to acquire more machines, even bigger machines. Then you know you're ready for growth. So, what would you need? What is that guide? What is that guide that will help you move smoothly from that startup stage? Using all those tools I told you about, your budget, your invoice, doing bookkeeping weekly or at least once a month. What will now make you, now you have seen that there is need for growth. You have seen growth is saying, it's time to move, it's time to move. So what do you need? Your growth map is what you need. Your growth map. And what is that thing called the growth map? What is that thing called the growth map? The growth map that shows you the way, so that you are not moving, going back, stepping forward, moving left and right. You're going straight ahead. You know the direction to go. That growth roadmap is called a financial projection. A financial projection. What moves you from your startup stage into the growth stage with ease, without any barrier, is called a financial projection. It is called a financial projection. Say it with me, a financial projection. And this is what a financial projection is. It is made up of 5 parts. A financial projection is made up of 5 parts. 1, the list. 2, the profit and loss statement projection. 3, the cash flow statement projection. 4, a loan repayment schedule projection. 5, a balance sheet projection. So I want you to say with me 5 things that make up your growth road map, your growth map. The 5 things that make up your growth road map, the map you need to grow. 5 things make it up, and those 5 things are: 1, the list. Say with me, the list. 2, profit or loss statement projection. Yes, say it with me. 3, cash flow statement projection. 4, loan repayment schedule projection. 5, balance sheet projection. These 5 things make up your growth map. Your growth map. The growth map that moves you from where you are as a startup into the growth phase. In this training, I shall introduce you to the list and to the profit or loss statement projection. To look at the others will be in a separate training, which I will tell you about later. But I shall launch you into your growth map by introducing you to the list and the profit and loss statement projection. So let's go. The list. What is the list? Before you start preparing your growth map, usually when you're doing anything in growth, when you're preparing financial projection, I shall be using the growth map and financial projection interchangeably because it means the same thing. When you're preparing financial projection for your growth map, you do not just do for 1 month or for 1 year. No. For growth to be meaningful, you need to do a couple of years. So 2 years, 3 years, 4 years, 5 years. That is a reasonable amount of time to do, between 3 and 5 years. So don't do for 1 month or 1 year. That is not that's not a good plan. A good plan means you are ready to grow. So if you are ready to grow, if you are moving from, for example, one salon shop to another shop, the next salon shop you are moving to, you are not thinking of leaving that place anymore. You are looking at the place that you will be in for at least 2, 3, 4 years, 5 years or more. So that is how you grow when you putting your growth map together. That is where your mind should be focused on. 3 years. I'm looking at the next 3 years, what I want to be. Okay, I'm moving from this place. I'm looking at the place that I will be in for 3 to 5 years. So I'm not looking for another small shop. I'm looking for a bigger shop. I'm looking for, so that is the way your growth plan, that is how your mind should begin to think when you're thinking of your growth map. And so the first thing on your growth map is the list. And that's why it says here, the list. Before you start preparing your 3 years growth map or 3 years financial projection, make a list of all that you believe your business needs, all that you think it needs. For example, the number of products and the price of those products, the number of employees you need, their salary, the number of machines you need, the cost of the materials you need, the prices, and all that. And so you have an example here. So for example, still using that salon I talked about, you will need, for example, in the new salon, you will need more employees. So if you currently had about 4 employees, you may need double that amount based on the customers you have. So you might need 8. If you had 1, you might need 3. So you can plan with that. So it's okay. I'm looking at the 3 years plan. So for the first year, which when we will move into this place, I currently have 1. I will need 2 more persons. So that will be 3. So you plan with that. That's 3. You add what is currently with you now, and also look at what the capacity for the new place you have. You add it together. That is the way you work with. So slants for employees, cost of an equipment. Oh, year one I'm going to buy an equipment, year two I won't buy because that equipment should be able to last me for 3 years. Year three I'm not buying it again. Year four I will buy another one. And so that's why the list is so important. The list is the foundation for your good map. If the list is wrong, then your good map is wrong. But if your list is right, that good map, I can tell you, is 90 to 100% correct. So do the work and the list. Settle down, don't be in a hurry to do the list. And so I have an example here. The example is about Amanda's Organics. Amanda's Organic makes natural hair products. So this business, they've been in business for 2 years, and the owner, Amanda, has decided that it's time to expand from its current one location to 2 more locations in the coming year. Before now, she has done pop-up sales in the proposed new location, and the turnout was encouraging. So to prepare for the expansion, Amanda needs to prepare a 3-year financial projection for her business. So this will assist her in raising funds and making strategic decisions. Following the advice of her accountant, Amanda has prepared a list. So this is a part of Amanda's list. So Amanda has, said, she currently has a sales girl in one location, but because she's opening 2 other locations, she will need 2 sales girls, a sales girl in each of that location. So altogether, from the new year, she'll have 3 locations, have 3 sales girls. Monthly sales currently, she has 1 location. The sales in that location is about 100K. So each location will also begin to make their own money. Rent for each location, you have 250,000 naira. She's going to subscribe to an additional software. And that software will cost 25,000 naira. And so that's an additional cost that Amanda is going to incur in a new business. Also, we also see furnishing of the new business. So Amanda will spend about 100,000 on each location to furnish the new business. And so these are what Amanda will incur in the new year. So she has made a list. Looking at this towards the middle of the sheet, you see P/L, you see C/F/B/S. The beauty of the list is this. The list, after making the list, there are items that will go into the profit and loss projection. There are those that will go into the balance sheet projection. Everything is not going to go. There are those that will go into the cash flow projection. So from the list, begin to break down which will go into which will go into which will go into which. And by the time you've made the list, you now begin to take into each column. Oh, this will go into the profit and loss projection. This will go into the balance sheet projection. This will go into the cash flow projection, and like that. And so Amanda's monthly revenue is about 150,000 naira with a profit of 50,000 naira. She has 1 sales girl at the existing shop. Amanda is hopeful that her profit or loss and cash flow projections should be able to get more goods on credit plus extended payment from her suppliers. Otherwise, she plans to get a loan from her bank and will prepare a payment schedule to find out if it will be worth it. If it will not be worth it, then she may decide to raise funds, maybe from relatives and friends. So the question says, prepare a 1-year profit or loss financial projection for Amanda Organics. And so let's go through our 1-year profit and loss projection for Amanda Organics. This is it. So as you can see, on the top of the profit and loss projection for year one, we have all the products Amanda is selling: hair stimulants, hair butter, magic growth, and the number of products. The prices are there too, and the number of products she's selling. And then we see the revenue. So our projection is that for her growth plan, year one, her revenue for year one will be 4.2 million at the end of the year. The cost of buying the products will be about 2 million. So our gross profit will be about 2.2 million naira. Then when she takes out other expenses, rent for the 3 locations, sales and marketing, salaries for the 3 locations, she would be left with a net profit of 740,000 naira at the end of year one. And I would say this is a good projection because she's making profit, more profit than she's currently making from one location. So she's making profit. So with this, yes, she should be able to obtain extended credit from her suppliers. But then, just in case they may not be willing to give her, and she needs to take a loan because she needs to now stock up more products with the additional locations, because she doesn't just have one location, she has 2 additional locations. Then she would also need to prepare her repayment schedule. She also needs to do her cash flow and her balance sheet so she can see and understand how she would be able to repay back, and if it would be worth it based on whatever interest the bank will charge. So this is the introduction. I told you about the introduction into the list and into the profit and loss statement projection. So I told you there are 5 parts of your growth plan. I've only just introduced you to the list, which is number 1, and to the profit and loss projection. You also have the cash flow projection. You also have the balance sheet projection and the loan repayment schedule projection. These 5 are important in your roadmap. The 5 of them are important for you to have a good roadmap, a good growth roadmap. Without the 5 of them, your growth map is incomplete. And so I've introduced you to this too. But I will advise that you learn and master and know the 5 of them for you to prepare a good growth plan before you begin to think of moving out into a new location, buying new equipment. Let your growth plan be complete. Let it give you the direction of where you're going. Let it show you like the map that it is, that this is the way to go, this is not the way to go. Or you can take a loan. No, you can't take a loan. Oh yes, you can open 2 more locations. No, you can't open 2 more locations. Those are the kind of things that your growth map will tell you. Your growth map, which is also your So that is what a growth map would do for your business. And so I have this exciting information to share with you. So we have put together a training for your business. We call it your business growth map training, and it comes up on the 3rd of October 2020. In this training, it's a live training. We will take you through the 5 parts of the growth map. The 5 parts of the growth map. The 5 parts that makes up your financial projection, the list, the profit and loss projection, the balance sheet projection, your cash flow projection, and your loan repayment projection. The 5 parts that I have, briefly talked about. The 5 parts that gives you direction regarding growth in your business. Your business will grow but you need the right knowledge, and you need to be prepared for that growth that you desire to happen in your business. And this is the training that will equip you for that. So the training comes up on the 3rd of October, and the fee we have, it's highly subsidized at 5,000 naira only. To even encourage more business owners to attend, we have gone ahead to give an early bird discount. So if you register on the 24th or 25th of September, instead of paying the highly discounted 5,000 naira, you further get a discounted fee. You pay only 4,499 naira. After 25th, it's a flat rate of 5,000 naira. So do not miss this opportunity, because I am not sure that we are going to organize this training again before the end of this year. Do not miss this opportunity to prepare yourself and your business for growth. Do not miss this opportunity. It's a knowledge that will remain with you throughout life. No one can take it from you. And it's not a knowledge you will use now and then you forget about it. No. You're going to use it throughout the lifetime of your business, and you will even pass it on to others who would help you run that business. Because at every point, you're going from point 1 to 2 to 3, this knowledge becomes useful. And it gives you direction. You are moving forward. You are not moving forward today, moving backwards. No, with your roadmap, your financial projection, you know exactly where you're going. You are sure. You are not saying maybe or maybe not. So please register for this training. You'll be doing yourself and your business a huge favor. Do not just register alone. Encourage your friend, a business owner, to also register for this training. To register for this training, please go to www.paystack.com/pay/grow with SBA accounting. Click on the link and register. If you have issues registering, please get in touch. Our contact details are on your screen now. Send an email, call us, or chat with us on WhatsApp. You can also send us a message via Instagram handle. Get on our Instagram page and send a message if you have any challenge with registering, and we'll take it up from there and ensure you register. Do not miss this opportunity, and ensure you get your friends to join, and not also miss this opportunity for growth, to be prepared, equipped, and ready for growth. I look forward to seeing you in class. Bye-bye.